Alright guys, I just wanted to join you for a few minutes here. We are closed today officially. And as we're watching here in a live trade, I'm going to show you some really cool things. You're going to see the market back up somewhere around 93, number one. You're going to see the market back up somewhere around the 93 area, which would be right around here, right? It's about 93. And it's going to have to make a decision. Now what happens is this, as the market was moving up, the retail traders were all selling. Okay? They're all selling and selling and selling. Now where do we get long? Without you knowing the methodology, I'll tell you, anywhere here or here. I hope everyone had a very pleasant Thanksgiving. Boy, I'll tell you, don't we all just overeat anywhere in here, and long we are. So we're keeping an eye right now, anywhere for you're long from the 92.80 level. And now this is either going to explode higher or it's going to pause out for a little bit. But if it can get higher, it's going to go to, it could work its way as high as 93.60. Now, am I saying it's going to get to 93.60? Not necessarily, because it's a free trade right now. But can it get to 93.60? You bet it can. So I'm going to put us on pause right now as we're looking to see if we can get the 93.60. We're in from 92.80. We've been in from 92.80. When I say we, I'm talking about me. I'm trying to do a nice little video for you guys so you can understand how this stuff works to some degree without getting too excited. Okay? So we will join you back here when something happens. Take care. Just hang out. I'll put us on pause. So as we're watching, we're long from 92.80. We have a very good opportunity and a chance for this to get all the way up to $93.60 in crude. When you have what we call, a free trade because it's zero risk, you've taken contracts off, and now you're just waiting to see if we can get to what we call our long-term price. Our long-term price here, which is 93.60. And yes, I got home late last night, and I'm sure a lot of you guys did too. This to me is nothing more than a bunch of fun. And when we see that something's happening, we're going to take advantage of it.
Call from Seth.
Okay, sorry about that phone there. So yeah, as we're watching here, we're looking to see if this can get up to 93.60. Now, as we're watching, okay, and we're long right at 92.80, and there's one main reason. First of all, it's what we call an S as in Sam play. This is a pure method trade. It's not like, gee, this is happening, that was happening. No, it's an S play. And we take our S play, we have our 20 penny stop. Worst case scenarios, we would have lost in the trade. Didn't happen. At this point, you make sure that you have at least 50% of your contracts off. You have 30 pennies made in the trade. And now we're looking to see if we get the $93.60 or thereabouts. We don't want to make rocket science out of what we do, because what we do is not difficult. You can't say it's easy because then you sound like a fool, because it's not easy. But if you are trading a methodology that's proven, it's not that hard. But if you get involved emotionally to the point where you can't handle how you're feeling about a trade, then you have major problems. But when you look here, you know that the retailers, and most of you guys who are going to watch this are going to know that, yeah, I would be selling up here too. Well, that's the wrong thing to do more times than not, right? Right where these bubbles are, more times than not, this is absolutely the wrong thing to do. But it looks like the right thing to do because that's what you know. You know, you're told. You've been told for years, sell resistance, buy support. Wrong. You buy support when there's an opportunity, and you sell resistance when there's an opportunity. And we're looking for 93.60. There's 93.15, 93.17. And we're looking to see if we can get as high as 93.60. Now, there's a standard deviation. Simple mathematics. A standard deviation would be within 12 pennies of 93.60, which is 93.48. And of course, this is something that you, of course, learn in the methodology as well. So if you were just a 3-lot trader, which is not a lot, no pun intended, you would have one contract off of 15 pennies, one off of 30 pennies, and you would have one left. When you're trading greater size, now we're waiting for 50 pennies. So what does that mean? 92.80. We need 93.30 to what? To make 50 pennies on this trade. So once we get to 93.30, another contract or two will come off. Ultimately, we should get the 93.60. That's our long-range target. Period. Gee, Sam, why? Why? That's what you learn, as well as everything else. Don't make trading so hard. You have to simplify what we do. And those who make it difficult and make it impossible and make it, I can't do this, and it's because there's a lack of understanding and a lack of knowledge. What you see here is what all the hedge funds and the big fund of funds do. What I teach, because I've taught some of them, is what they do. So we're looking to see if we get the 93.60. As soon as 93.31, 2 more contracts are coming off at 93.30. You're watching us all in front of you right now going, wow. All right, so we're going to see what happens here. We're going to see what happens here. How high did we get so far? 93.30. We need 93.31 to get 2 more contracts off. Isn't this always the name of the game? You're trying to get out of it, some more 50 pennies, and what do? They play games. Okay, there we go. So now we have most of our contracts off. I personally have 1 contract left, and I'll look for 93.60. How's that? I have 1 contract left, and I'm going to look for 93.60 with a standard deviation of 12 pennies, which would take us to 93.48. So let's put that on the chart, 93.48. Now, what does that mean? When you hear 93.48, what does that mean to you? Well, you're sitting there going, well, what do you mean standard deviation? What do you mean 93.60? Well, that's what we call our long-range target, where the market wants to go. And it's not based on any of those, some of these things you guys use, extensions and all this other hocus-pocus stuff. But it's based on how crude trades. Period. It wants to go to 93.60, or with the standard deviation of the mean, it wants to go between 93.48 and 93.60. I'm going to put us on pause so we don't have a 1-hour video here, and we'll see where we go. But right now we have all but 1 contract off. So something has come off at what? Something has come off 15 pennies, 30 pennies, and 50 pennies. And now we're looking to see if we can get between 93.48 and 93.60. I'm not going to complicate it any more than that. If we get what's called a material change in the marketplace, that would get us out of the trade. And if that occurs, I will let you know immediately. All Alright, so let's see when this candle closes, because we may get a material change in the marketplace. And if that's the case, I will tell you exactly what's going to happen. And that's what's fun. So 93.48 to 93.60. That's where the market wants to go. Right now, it's moving beautifully. So we have some contracts off at 15 pennies, some off at 30 pennies, 2 off at 50 pennies. I have 1 contract left, and it's coming off at 93.52 because the standard deviation from 93.60 is 93.48. 93.52, my last contract will come off. Unless, of course, we get a material change in the marketplace. So far we've gotten up to 41. So you make sure if you're using Ninja, you have your automated material set to come off at 93.52. That's what you would do. That's what I would tell you. That's what I would say. Now this is going to come back down before it moves up again. It's going to come down a little bit. It's going to come down a little bit before it goes up again. But we're looking for 93.52. 93.52, and we are done. I'm going to put us on pause as we come down first, and I'll be back. Okay, just back here for a second. We're looking for 93.52, and for me, the trade will be over. Okay, we're not there yet. We still need about another 10 or 11 pennies. Now, as we're looking, we're long from 92.80. 93.52 is 72 pennies. Now, that would be only on the last contract. Right, we have some off of 15, a little bit off of 15, 1 or 2 off at 30, 2 off at 50, and the last contract, 93.52, and I will shut this down. And this is more of an educational type of video than anything else. But I do plan on doing more. It's just difficult because I don't have 500 screens anymore. So let's see if we get to 52. 52. Very close. As I said, if we do get what we call a material change in the marketplace, we will close the position out immediately because we're not going to want to take any chance of this thing pulling back 30 pennies. That would be silly. Regardless that it's going up to 93.60. Okay. Right now is where you would close the position out. Close the position out. Position is closed. Close your position. This is what you would be taught. Take your profit. Nobody can take it. As soon as this candle showed up, okay, you're out of the position. You close out of the position simply because this is what's called a material change in the marketplace. This market will come down now. This market will come down 15 to 20 pennies on a minimum side. This market will come down 15 to 20 pennies. So why sit here and take a risk when you can have your profit here and have over 50 pennies made even on your last contract? Why take the shot of this thing coming down? We know that there's an 80% chance that this will come down 15 to 20 pennies before going higher. Period. This is the video of the day. Everyone have a great day. And I just want to show you so you can track it for yourself. We got out at 10:09 Eastern Time. As soon as that candle pops up, I'm out. And there's a million reasons for it, and it doesn't have to do just with that. It has to do with how everything is orchestrated. Now, there's individuals who are out there who are going to say, well, gee, Sam, how about your target of 93.52? It doesn't matter to me now because there's a material change in the marketplace. There's no need to sit there and push it. If it gets there, God bless it. right? It's 4 pennies away. So I got out about 12 pennies prior to it because there's a material change in the marketplace. There's an objective reason why I got out of the trade. Does that upset me? Not at all. Why? Because it's discipline. We have to be disciplined. Even though we may, there's the target. The target's hit, 93.52. But it doesn't matter. It's discipline, ladies and gentlemen. Everyone have a great day. Remember, some contracts came off at 15 pennies, some at 30, 2 at 50. And then the last one came off right after this candle, 10:09 closed, and I'm out of the trade. If this goes another 100 pennies, you know what I say? God bless it. Everyone have a great day. We really hit all the targets, the material change in the marketplace. This is how objective the methodology is. And this is why I want everyone out there to stop fighting the market and saying, I can't do it. Because I can teach you. We have a very large staff. We can all get you to where you need to go. Is it hard work? Sure. Are you going to get rich overnight? No. The one thing that I can promise every trader out there, every trader, is I will personally make you the best trader you can be. The best trader you can be. And I don't think you can ask for anything more than that. Once again, everyone have a great day. Be careful out there if you're shopping on Black Friday. There's a lot of crazies out there. And until Monday, enjoy your weekend. And don't forget to watch your football. Take care, guys.